Hello traders, Gary Wagner here just after 11 o'clock in Honolulu, 5 o'clock in New York. It is Friday. Happy Aloha Friday, as we say on the islands, 24th day of August, 2018, and this is the Daily Report for Gold and Silver, our weekend review, and what a way to end on the week. Sharp gains in the precious metals complex, with gold trading up over 1.5%, $18.30 gain, with December futures closing at 12.30. We'll talk about that in detail as we pull up our technical studies. Silver gaining 1.67%, about 25 cents, closing at $14.78. And a lot of that directly attributable to dollar weakness today. The dollar itself closed over 0.5% lower and is currently tracking at 95.06. Now, statements made by Fed Chair Jerome Powell also influenced U.S. equities markets that did exhibit gains, $133 plus on the Dow Jones Industrial Average, 25,790. S&P also gaining about 0.6% at 28.74. And lastly, the NASDAQ Composite gained almost 0.9% at 79.45. Traders, following a speech made by Chair Powell at Jackson Hole today, we saw sharp upside moves in the precious metals markets as a whole, with gold moving up about $18.30. That's the current print at 12.30. That is basis most active December's contract. Now, that is bittersweet for us because if you recall, on Monday, we got out of our short position. We pulled profits. The profits that we pulled were about $2,500 per COMEX contract. The following day, we went long. Traders taking that call got in at $11.9950. However, on Wednesday of this week, I did recommend that traders go ahead and trail that stop up higher to $11.8950, and today's low was $11.8950. So while I know that anyone taking our call specifically along with that stop move actually got stopped out at a small loss, about $10 per ounce, many of our subscribers use our recommendations to aid in their techniques that they use, and so they are still long gold. And to that end, for those traders that took the long trade this week, if you could email me and let me know if you're still actively in the trade or if you got stopped out, I will have a better sense of how to work with my subscribers come Monday morning. Obviously, the question becomes, where will gold trade from here and what can we expect next week? We are looking at a 2-day candlestick chart. And as you can see from this chart, our next level of resistance in the market comes in at about $5 above current pricing, which is $12.17. That is a 0.618% retracement. We also see a band or series of lows that came in before the market dropped, suggesting that this area was a strong area of support that I now believe has become resistance. So as we see the markets open up next week, if we have a continuation of today's move, we could get some resistance at around 12.17, and we'd want to see how it reacts there. Should the market go through that particular price point and close above it, our target would become revised, and I would be looking for a move to possibly 12.46. That is the 50% retracement. And remember, this is a long data set beginning in the end of 2016 when gold was trading at approximately 11.24 up to the highs this year at 13.70. Should we find some real resistance come into the market, we could see the market backtrack, and then I would look for a support level of about $1,200 per ounce. And traders, when we look at action this week through the eyes of a weekly candlestick chart, we can see that we have a 2-day pattern, which is in essence a bullish harami, and we would look for follow-through buying to complete this pattern, which would be a bullish harami confirmation. A bullish harami confirmation would be that next week we had a long green candle with a higher high and a higher low than we got this week. And that would really tell us that we could have ended this long-term sell-off and at least for now have some sort of corrective bounce to the upside, even if we're still in a bear market, or a pivot point to a bull market if we see the market turn around long term. My sense is that we are probably going to look at some sort of an upside bounce that is a correction to this long and protracted move down, but we will have to see how this develops next week. My recommendation, therefore, is for those traders that are not stopped out of our current trade, maintain your long position at $11.9950 and maintain the stop wherever you put it at. If you were stopped out, we will look to re-enter the market next week, and that will be based upon how the market opens and if we see a continuation of today's trend. Traders, obviously, today's strong upside move in gold was bittersweet. It was sweet in that we did go long at $11.9950, and it was bitter in that we did raise our stops to $11.8950, which was the low of today. As I am acutely aware of, many of our subscribers use stops as a suggestion and therefore place them according to their own risk tolerance. And because of that, I would really like you to email me to let me know if you've been stopped out or if you're still maintaining a long position. As far as the hurricane in Honolulu goes, we have avoided the worst of it. We'll have to see what happens on the weekend, but I do look forward to visiting on Monday for another update and review. This has been Gary Wagner, wishing you as always good trading. We'll talk to you on Monday. Bye-bye.